Hi, this is Sandra Cho with Pointwealth Capital Management, and today I'm going to be talking about April 2023. In April, the S&P 500 was up 1.56%, with the Dow doing 5 times better than the NASDAQ. European stocks did much better than emerging market stocks, and U.S. bonds continued their modest rise. In April, inflation cooled and people spent a little less than they had before, but they are still spending. Prices on goods went up 1.6% and services went up a whopping 5.5%. Personal income growth increased very modestly for the month at 0.3%. The things people are spending the most money on are still housing, utilities, healthcare, and food. GDP came in at 1.1%, seasonally adjusted for the first quarter, which was expected. In short, inflation is barely coming down. People are not making more money. Housing is still hot, and the U.S. consumer is still spending. As a result, the Fed is expected to raise rates 0.25% in its next meeting in early May, bringing the rates to 5 to 5.25%, which is the highest since 2006. Now for the latest breaking news. First Republic has been taken over by FDIC and becomes now the second largest bank failure, taking the ignominious title from SVB. JP Morgan is the new owner and has guaranteed all deposits, even those over FDIC insurance limits. With almost 200 banks with balance sheet issues still at risk, we may not have seen the last bank failure. And it's understandable that most banks would have issues. After all, they have to pay more for customers to park their money in bank accounts, while mortgages they have on their books are fixed at low interest rates. Not to mention, we still see some darkening clouds for commercial loans, since not everyone or will be coming back to the office. On a bright note, tech companies were the first to start laying off people, and they are the first to talk about seeing a light at the end of the tunnel. The NASDAQ is up over 21% for the year, more than twice the S&P 500, with Meta leading the pack at almost 100% return. Thank you so much. See you next month.